Darshan. Can you guys hear me? I was hoping everyone that comes on stage gets a check. It's not how it works. So as Dr. Darshan mentioned, we are Gopher. We are trying to reduce the debt burden that individuals in healthcare professions take on. But before we get into that, I want to tell you a little bit about my background. So a time long ago, I was an undergraduate student at UT Austin. Texas? Weak, guys. I'm disappointed. So, like many other students, I was trying to figure out how to pay my way through college, often working multiple jobs in between my semester classes. At one point, it was so hard to fund my ramen noodle diet that one of my part-time jobs was being the female Easter bunny. It's sad, but it's true. All in all, 4 years later, things worked out really well. I had two really exciting opportunities. One, to take a lucrative opportunity job in finance, and the other was I had taken all of my exams and taken all of my prereqs and gotten accepted into the medical school of my choice. So at this point, I had a really big decision to make. What path was I going to pursue for the rest of my life? And to make that decision, I turned to those I trust most, my loved ones, my family. I took an interesting approach and actually made a presentation and an Excel sheet with my future earnings on both career paths and actually presented them what my opportunities were here during Christmas break. It was a pretty stressful holiday. And it turns out I'm standing here in front of you today not as a doctor for one particular reason. I realized that while I was able to figure out how to pay my way through undergrad, it was going to be an impossible task in medical school. And I was going to have to take on upwards of $200,000. And at the time, I wasn't willing to pursue and prioritize my personal dream of becoming a doctor over my family's financial situation. Turns out I'm not the only one in this situation. On average, 86% of medical students and dental students graduate with an incredible amount of debt, anywhere from $170,000 to up to $250,000. And over time, as they pay off this debt, they end up paying 40 to 90% in interest alone. And how it works is as they accrue debt in undergrad and further accrue debt in medical school, they often have to opt for a deferred payment plan during residency because they're only making $50,000 per year. They're not able to actually pay for the debt because they're living on such a minimal level lifestyle. What happens is this debt compounds on itself and can ultimately double by the time they're an actual practicing physician. At that point, their monthly payments have increased from $300 per month in undergrad to $1,500 as a medical student, now being $4,500 per month. That's where Gopher comes in. We're an online technology lending platform connecting individual borrowers with student debts in healthcare professions, with individuals looking for alternative investments. The borrowers being, in this case, medical students, dental students, optometrists, veterinarians, etc. And the investors being practicing physicians looking to invest in the next generation of doctors, as well as high net worth individuals, banks, and institutions. We streamline the process, which includes the underwriting process, risk scoring, and the servicing of that debt to make the entire process easy for both sides. Let's look at how this works as a case study. Take Henry, for example. He's a fourth-year individual graduating from medical school, and he's looking to go into residency very soon. Problem is, he has $200,000 of debt and 7.5% interest rate. And he doesn't know how he's going to afford that in residency once he starts to try to pay for that. On the flip side is Sarah. She's an established, successful physician, and she's trying to figure out where to put some capital to use. She's already over-allocated to the financial markets, and she's already over-allocated to real estate. And she's looking for an alternative investment with a safe, low-risk profile. Gopher provides a win-win opportunity for both. By going through the process of analyzing Henry as a risk candidate, we're able to assign him a B-level risk grade, the Gopher score, and bring his interest rate down from 7.5% to 5.5%. That saves him $25,000 over the life of his loan. Furthermore, by providing a unique structure to our loans, where he's only paying the interest and not the principal, we're able to bring his monthly payments during residency from $2,200 down to a more reasonable amount at $900. So he doesn't have to actually double the amount of his interest and his debt by the time he's a practicing physician. On the flip side, Sarah is able to find an attractive alternative investment, and she feels great about investing in the next generation of doctors. As we all know, student loans is a huge issue. It's a $1.3 trillion market, and it's growing by $2,700 per second. Within that market is the healthcare professionals, medical students and dental students, which are about $90 billion and growing by $6 billion every year. Within that specific market, we're focusing on Texas, which is about a $6 billion market itself. So one of the first players in this space, which is a very new space, is SoFi, which was founded in 2011. That company was based on the concept of having Stanford MBA alumni investing in Stanford MBA students. They've come a long way in validating this type of business model since then. They've refinanced and executed on over $5 billion in loans, and just this year, we're able to gain a $1 billion investment and are pursuing a $30 billion valuation. Since then, they've expanded into multiple other asset classes beyond just student loans. And I think that's where we differentiate. We're specifically focusing on the healthcare professionals within Texas, and that allows us to expect a much lower default rate and keep it at a much safer investment for potential investors. If there's one thing we've learned through the Collide Village Accelerator, it's that data is king, and to get out of the building. And that's exactly what we did. We went out to multiple campuses for the medical schools and dental schools and interviewed with over 50 students, residents, and doctors, and found out a lot of them don't have the time to even figure out what debt they're carrying right now, what interest rates they're carrying, the terms of those loans, much less how much debt they'll actually have once they eventually graduate and start practicing. One thing is unanimous, though. They know it's a huge problem, and they're looking for any potential solution. Through this process of explaining what we're doing, we were able to acquire 15 students, which is about $2 million. And we've actually stopped accepting additional students until we can meet that capacity. On the flip side, we actually went out and met with multiple investors, banks, and institutions as well, over 20, and asked them, are you investing in this space? If not, why? By and large, a number of them were not. And the reason is because of the volatility of student loans in general. That being that, on average, student loans default at about 12%. But upon explaining to them the specific focus that we are focused on, the specific area we're focused on, a lot of them said it was a space worth exploring. And we currently have a working relationship with one bank that is looking to refinance the current pipeline that we have in 2016, quarter one, and continue to ramp from there. As I mentioned, our specific focus is Texas. Beyond the fact that Houston is the largest medical center in the world, Texas is the third largest state in regards to number of medical students and number of dental students. We have 8 medical schools and dental schools. We have 8 medical schools and 3 dental schools. And at any given time, there are 15,000 students and residents furthering their education in Texas, and also 60,000 physicians practicing within Texas. To penetrate this market, we're taking a 3-pronged approach. Firstly, we're going to be having 2 to 3 campus representatives at each of these campuses, spreading the word about how we can help their students. Secondly, we're going to be marketing towards doctors' associations and groups. And lastly, we're going to be offering a $500 student referral in order to help spread the word about our goals. The economics. So for every single student that we're able to help refinance their debt, we'll be getting a 2% origination, which is a lot less than a lot of what our other competitors are charging, between 4 to 6%. Additionally, we'll be getting 25 basis points, being 0.25% for the years to come in order to service that debt. All in all, our customer acquisition, conservatively, should be about $2,000, which is a lot less than the industry standard at $1,000 to $1,500, which we think we'll be able to get as we reach scale. As it stands, our margin should be about 80%. And in 2016, we expect to refinance 50 students, approximately $10 million. We think we've put together a really great and diverse team to help tackle this issue. Myself, Sanjay Gulati, my background comes from investment banking, mergers and acquisitions, helping companies convert from one stage of their process to the next stage of their business life cycle. I transitioned that skill set into the hedge fund world on the trading desk, trading corporate loans, high-yield bonds, and structured products. We also have Anu, who's a fourth-year medical student at UT Southwestern, which is one of our primary target demographics. That, in the combination of her background in consulting, bring a really great blend of business and healthcare experience. Shashi has helped build and sell a startup company and has also been the tech lead on multiple other companies. And Chandra is our marketing guy who's built marketing campaigns from the ground up for multiple other startups. We're here today to ask, similar to how our business model is a two-sided model, we're here to ask for a two-sided ask. On the one hand, we're asking for $150,000 for 10%, which will allow us to acquire the 50 customers we have expected for 2016, as well as further develop our technology platform. On the other hand, we're looking for $1 million in asset funding, and the benefit of investing with us through this avenue is that you'll get exclusive pricing that you would not otherwise get through typical means on our website platform. We thank you for your time, and I would like to make a special request for you guys. We're looking for somebody to partner with us who has the same passions we have to serving the individuals that serve us on a day-to-day basis. These individuals have sacrificed decades of their time and hundreds of thousands of dollars, something that I didn't have the courage to do. And it's about time that we pay them back. Thank you for your time.